What's up, everyone? All right, so in today's episode, I'm going to break down the trades I took today, and we're going to talk a little bit about what's going on with some of these Chinese stocks, because yesterday was kind of wild. XHG was the stock that I made the most on. It squeezed up 196%, but by the end of the day, it was down over 50%. I think it was down nearly 70%, which is almost unthinkable. For such a huge move up to a high of about $3 a share, something like that, all the way down to 30 cents. It just got obliterated. And this is very common among Chinese stocks. We've seen this a lot over the years where sometimes they'll grind higher over the course of several days, even several weeks. But when they start dumping, it's unrelenting selling. They just dump and they don't bounce. They just go lower and lower and lower. And on those days, it feels like insiders or someone that was holding a huge position is just totally cashing out. They're just dumping shares on the market. And the little traders, retail traders like you and I, who might be trying to buy bounces, buy dips, it just keeps going lower because the sellers are so much stronger. So that happened yesterday. And when that happened, I kind of thought, all right, well, that might put a damper on momentum for today. Now, interestingly, Duo is the stock I trade today. I'm only up $1,000 on it. I really took it slow today. In fact, today was probably one of the slowest days in the market that I've seen in about maybe over a month. It was very slow. We'll talk about Duo in a second, but let me look at XHG first. So this one yesterday, you look at this chart, it's really wild. Look at the degree of selling. So what do we know about XHG? Well, we knew that this was a stock that squeezed up with no fundamental news. There was no catalyst behind the move. Let's look at the volume of this sell-off. This was millions of shares being dumped on the market, and there was not a lot of buyers supporting it. It was just a lot of selling. So this was the liquidation here where you had, 40, 50 million shares of selling volume. But what's interesting is this initial move up right here. How much volume was this on the initial spike up? 83,000 shares on the first candle, 500,000 on the second, 1.5 million on the third. So with 2 million shares of volume, the stock goes from $1 up to $1.80. It pulls back and then it pushes higher, pulls back and then it pushes higher. And so what we've heard from interviews with some of these big hedge fund traders is that what they've done in the past, and probably still do, is they'll find a stock, maybe like this, where they want to create liquidity. And so what they'll do is they'll say, you know what, we'll buy 2 million shares worth of this stock to create that initial surge, that initial pop. And then once it has that initial surge, they expect other traders are going to come in and it's going to become actively traded. And when it becomes actively traded, that creates the liquidity to move out of a position, a big position, or to move into the market with a big position, depending on which direction you're going. So if we back this up on XHG and we just sort of do some measurements of volume, the initial move up, which was right in here, was on 9.3 million shares. Now I traded it in this move here. Once it started to pull away, I jumped in, and I'm sure a lot of traders did. Once it was spiking up, we rode the momentum. So that first spike that kind of got it started was like 2 million shares of volume. And I'm sure some of it was retail traders who were jumping on very quickly to something that was hitting the scanners. But what initially created that first pop, we can only really speculate because we don't know. There was no news headline. There was no fundamental catalyst. It just, for some reason, started popping up. Someone liked it and started buying shares. And next thing you know, it was hitting scanners and then people were jumping in. So it makes that initial pop up. And then after that initial pop up, and by the way, this traded yesterday a total volume of 169 million shares. Wow, that's a lot of volume. So the liquidation appears to have begun pretty much right here on this candle and then lasted until really about here. That was that period of just heavy selling. And that stretch right there, oh, I've got to click here to the beginning, sorry. So from there, so we're going to go from right here, that candle, to, about this candle here. That was about 45 million shares of volume. So, if there were insiders or some big fund that owned a lot of this stock, even if they owned 10 million shares, 20 million shares, 30 million shares, this was the period where they were just selling, just dumping shares. And of course, there are retail traders in here who were shorting it and some retail traders who were, buying it. But the retail traders, we're just the little baby minnows in the ocean. We're not the whales that are creating these waves. We're the traders that are just sort of riding the momentum of the waves. But this is a huge liquidation. Now, if I pull up this class here, let's see. I actually taught a class on Chinese stocks because this is not the first time that we've seen this. Let's see, where is it? So I'll just put this up here, and I'll put a link at the end of this class to the class specifically on short selling, because it was the class on short selling where I talked about this phenomenon of Chinese stocks. Because a lot of people will see this and think, oh man, I should start shorting these, right? These single days where a stock drops 90%, I mean, that's like a stock going up 100% in one day. I mean, that's an opportunity to make some really good money, which is true. However, while we do see a lot of these moves, what we also noticed is that sometimes they catch you by surprise. And so let's look at this one. So this was a trade, CHSN, where a 5,000 short position could have produced a profit of $80,000. It was just a massive dump, not even a huge position. And so I started getting dialed in on thinking I wanted to trade these. And then we had this stock. So this was one, HKD. This is a Chinese stock that, you know what? I don't know who was pushing it higher, but this thing went from about $5, $10 a share to over $2,500 per share. A 5,000 share short position on this could have produced a loss of $12.5 million. And brokers will auto liquidate your accounts. Now, this was the one that was pretty crazy. We had this Chinese stock, ZJYL, that halted down like 5 times in a row. Then it halts up twice. And it goes from a low of about $10 a share all the way up to $500 a share. It halted up at about 20 and opened at 500, which is unthinkable. It's unthinkable that that could happen, but it did happen. And again, a 5,000 share position could have produced a loss of $2.4 million. So, that for me was a big wake up call on trying to short these stocks because they're just so darn risky. Now, I'm comfortable trading them to the long side because right now in my account, I reset it to about $90,000. I don't know, it was about a month ago or something like that. It's now grown up to about $190,000. So I've got about $194,000 in my account, which means if I took a really bad trade, the most I could lose is $190,000. And while that would be disappointing to take a loss that big, there's no question about it. At the same time, having made over $13 million in gross profit, I could handle a $200,000 loss and I could recover from it. I was up over $200,000 just in July. So I could definitely recover from it. However, if I was shorting and I shorted a 5,000 share position worth, let's just say $200,000, and then the stock opens at $500 a share, my mark-to-market loss would show unrealized loss of $12.5 million. And there's nothing you could do about it. There's nothing you could do about it. You'd have an instant margin call. Your broker would instantly liquidate you, and you would be negative $12 million. And that would be my entire career gone in one day, in one trade. Can you imagine that? I mean, let's get real. That could have happened to me. I was so close to taking that type of trade because I had just watched like 15 other of these Chinese small cap stocks do 90% drops. So I was like, this is easy money. Well, there is no such thing as easy money. And with these Chinese stocks, you got to prepare for the unexpected. And so people seem to think like they knew what was going to happen. They knew what was going to happen. And then all of a sudden, ZJYL just rips the faces off of retail traders and it totally obliterated short sellers. Really unprecedented. And, you'd think like that shouldn't happen. And it shouldn't. It doesn't make sense. And does it feel like it's just a total ripoff and almost like some kind of scam or something? I mean, it just doesn't feel right, but it happened and there's no refunds in the market. And, think about GameStop. I mean, GameStop cost, some of those big hedge funds, what was it? Melvin Capital lost like $6 billion. So I mean, they could have argued as long as they want. They might be on their deathbed being like, that should have never happened. That should have never happened. GameStop was not worth $500 a share. Should have never happened. But stock keeps going up. How long can you hold it? And honestly, if Robinhood hadn't taken away the buy button and the other brokers done the same, this probably would have gone to $1,000 a share. So when it came to that and big money, they protected their own. But when it comes to these small cap Chinese stocks, I don't even know if the market regulators or whoever even really knows what's going on with those. I have no idea. But in any case, after seeing XHG yesterday, I did see some people who are like, oh man, Ross, I can't believe you didn't short it, blah, blah, blah. And some people who are like, wow, you're so lucky. You could have gotten destroyed on that trading on the long side. And, my argument on that side would be, well, the fortunate thing with this is that I could have always, of course, sold. The biggest risk is when you're in a halt and it suddenly opens down 90%. But that's not what happens with these. Opening down 90% doesn't allow the liquidation. And they need the selling. So they need the volume so that it doesn't halt. It just keeps popping up just enough to not halt, and then it keeps going more. And I mean, sometimes they halt, but they don't want the big gap down because that doesn't allow them to unload the stock. The shorts that pop up and then open way higher, that feels like they're somehow controlling that resumption price and creating that crazy $500 resumption, which just destroys anyone who's short. So, and the thing with the resumptions is that when the stock is halted, you can see the quote of what it's showing. And so if all of a sudden there's a massive order there showing that bid, then everyone who's in it short is showing an unrealized P&L in the negative. So then all the brokers are like seeing these big flashing red lights like, wait, margin call, margin call, margin call. You've got a client who's showing an unrealized loss of X amount of money. We gotta get rid of this thing. And so then they come in and take over the account and they try to cover the position while the stock is halted by pressing the buy button. So now all of a sudden you get all of these buy orders. You don't have sell orders. No one's going to sell when they see it going up 500. I mean, well, some people will, but you have a lot more buy orders than sell orders. And then all of a sudden you get this crazy resumption. So the whole thing sometimes feels just like really unfair for retail traders. And I think at some point we'll probably see this pattern with these Chinese stocks end, and it'll probably end with them no longer being allowed to be listed on the markets. That would be my guess. There are much more stringent requirements for listing to prevent this, because this isn't good for shareholders. It's okay for shareholders when a stock goes up 1,000%, but it's definitely not okay when it goes down 90% in one day. The market's designed to go up, so these stocks are kind of breaking the mold, and I think that's not going to last forever. So anyways, crazy move yesterday on XHG, and got in, got out, traded it pre-market. That was it. I didn't trade it past the open, right? I just followed my rules. So today when I sat down, I saw Duo, which is also a Chinese stock, dropped yesterday afternoon around the same time that XHG was dropping. But then by the end of the day, Duo had rallied back up and into after hours spikes up here at like 7 o'clock to new highs. 4 a.m. pops up to 4, and then it starts selling. Now, Duo, again, Chinese stock, no real catalyst, no real reason to be up. Also a stock that in the past in one day went from I can't remember, it was like $5 a share to $100. So it's got a history of making big moves, but this is super crowded with shorts. Short sellers are trying to hammer it because they're looking for a repeat on XHG. So at the open, shorts hammer it, halts down, goes lower down to 220, and then it rips all the way back up, but then back down, and then back up, and then back down. So right now, I would say shorts are struggling to maintain control over it, and they're hoping that it's going to drop, but for some reason, this one's not dropping. What's that reason? Well, for whatever reason, this doesn't have the liquidation from insiders. So it's sort of a retail trader tug of war here of longs and shorts, and maybe there's some big money traders, that are on the buy side on this one for whatever reason. We do have that economic stimulus out of China. So has a double top up here at 4, and I could see it if it starts to pull away, halting up and doing some wild moves. And the question for me is, should I trade it? I'm at $1,000 on the day. It's the first day of the month. My window where I perform the best has closed. It closed at 10 a.m. So I said, as tempting as it is to consider a trade over 4, I said to myself, no, I'm not going to touch it. It's just not worth it for me to make a mistake on the first day of the month and then look back and think you broke your rules about trading past 10 a.m., trading past your sweet spot. So the only trade that I did take on it was this morning as it broke over VWAP. Well, I took a couple trades. So the first trade was on the break of VWAP right here. That was a break of VWAP setup. Got in, squeezes up to about 360, drops down, got back in, boom, right there for that breakout. Those are my 2 trades, right in here on the break of VWAP and right in there on that flat top breakout. And I only made $1,000, and that was my total profit for the day. So it was a very light volume day for me. Accuracy was 100%, which is great, but I just didn't see any good quality setups beyond that. We had this, and then at the open, there was a stock, NIXX. This one, very light volume. It squeezed to a halt level up. It halted up. It opens higher, goes to 550, and then dumps to 350. I mean, that's a roller coaster. And I said, I don't want to take a ride on the roller coaster today. It's the beginning of the month. Not enough volume, no catalyst, no news. It's not A quality. And the thing is, I'll say that in a hotter market, I might have taken a trade on this. In a hotter market, I might have said, I'll take the risk on it. It's clearly moving, from 350 to 5. Could have gone to 6 or 7 on a day where the market was hot and there was some real momentum. But on a day like today, when we sat down and our leading gapper was like 38% this morning, it was pretty obvious that it was not happening, right? And so other stocks that ended up pulling away a little bit, EONR, this one late morning, so no trades on that for me. Not going to say it's not a nice move. It is. This one just happened outside the window where I'm performing the best. And that's going to happen sometimes. INDO, so this one, get a nice squeeze up right there, up to 3, pulls back up to 315, 325, goes all the way to 4. I was hesitant on this. Indonesia Energy Company, have traded it before. We did well on this one in spring, March of 2022, or was it 2023? No, I can't remember. It was 2022. So this was when there was a surge in energy prices, and this stock went, it was crazy, from $4 a share all the way to $80. And there were a number of other energy stocks at that same period of time, small cap energy stocks, that made similar moves. So, that was awesome. And that was then. And now these are all on the backside of the move. Forever they'll be on the backside of that move. Most of these are never going to get up to those levels again. It's got 80 million shares of volume, but it feels awfully thickly traded. It just doesn't feel worth it. Now, I did get another trade in the small account, not today, but yesterday. So that would make day 10. Haven't uploaded a recap for that yet. That's going to come soon. Did upload the recap for days 8 and 9 on Saturday. So if you haven't checked that out, you can by all means check it out. Getting closer to my goal, but still need, probably another week of some nice trades. But I'm really only going to take A quality setups over there. Currently averaging in the small account about 91% accuracy. And, I'm really proud of that, but I've only taken, I think, 11 trades. So I'm keeping my quality standard super, super high. And if it doesn't look awesome, I'm not trading it. So INDO, didn't like it for either accounts. HUSA, Houston Energy, American Energy, another small cap energy stock. Usually energy stocks are not really hot. They just happen to be moving up a bit today. And that may be related to the shipping strike and stuff like that. So, I don't know. It's just that could be a play that we see more opportunities on, but currently it feels too crowded. It doesn't feel like we have an edge there. So I don't think it's really worth it. I'd say Duo, I'd be interested to see what it does this afternoon, but I'm not going to break my rules and trade it in the afternoon. I know that that's not worth it. When we look back at the month of September, and I have uploaded my broker statements for the month, by the way, so those are live on the website as they are each month. You could see, I think, every month for the last 7 or 8 years. But yeah, we look at the month of September, and September was not a great month. I'm being a little hard on myself, but I I wasn't happy with how I performed in September. I thought I could have done better. $81,000 in profit, accuracy 61%, profit loss ratio $418 winner, $377 loser. Fees and commissions were $22,000. That's 25% of my profit goes to fees and commissions. That's a lot. And that was the result of overtrading. I had a number of days where I overtraded. I had 3 red days actually. Spiral here, another spiral here, but a good recovery right through here. And I like what I was able to do with discipline through this area. This was really good. This recovery wasn't so clean because I was still kind of trading just very sloppy, but this was much cleaner. So my biggest goal for the month of October is, I want to focus on high accuracy, because if I look back at the month of August, in August, I maintained unusually high levels of accuracy. Accuracy was over 70%. So just over, but over 70%. And my profit to loss ratio was 2-to-1. Average winners were 516, average losers 283. This was really solid accuracy for August. I'd like to repeat that for October. So today is off to a good start because I only took really 2 trades and I'm green on both of them. So, all right, that's a pretty good start. And I'd like to keep it up, right? So that means I've got to stay, kind of keep the guardrails on. Now, I talked about this in an episode that I'm going to upload soon in quite a bit more detail. But the thing that I found really interesting was that my success in the last week of September was the result of putting on guardrails and trading less. I had the best week of the month with the fewest trades. And that just was the way it was. It was the best week of the month, and it was also the week where I had the fewest trades. But my accuracy was the highest. The reason I had less trades was because I adjusted my quality filter to not take anything less than A quality, which was my idea to sort of help me sort of get recentered after having a couple of weeks of sort of spiraling and being just way too aggressive. So now I feel like it's just a no-brainer to continue that because it produced such a strong end of September. Now, it's possible that today you could say, well, Ross, you really undertraded. You only took 2 trades. Oh, they were both winners. Well, that's true. But what if you had traded a couple of, I don't know, B or C quality setups? Maybe you could have made a little more money. Maybe. I would have gotten more trades. But I could have caught, a nasty loss, one of those jackknifes. And then all of a sudden I start the first day of the new month in the red. And some of you may have done that. You may have started the first day of the new month in the red. So that's okay. It's never too late to get back on course. So what I would say is for tomorrow, let's all focus on A quality setups. And if we only see 2 or 3 of them, then you're only going to take 2 or 3 trades. But hopefully you're going to be right on maybe all of them even. And look, if I sit down tomorrow and I pull up the gap scan and we end up having some stocks that are up, 75, 100%, and they look really great, then tomorrow could be a terrific day. It could be a $10,000 day. That's the amazing thing with trading, is that one day I could be basically, $1,000, small, tiny green day for me. And the next day it could be $15,000, $20,000. Best day of, the month. And that's because every day I trade different stocks. I'm not someone who's trading Apple every single day or, Nvidia every single day. Those traders, maybe they might have sort of more, consistent profits. But when you trade different stocks, you could have all of a sudden, you go from basically nothing to a stock that goes up 700%, like we had with GLMD or PRTG last month, and boom, you're locking up a huge winner. And it is certainly possible that something like Duo could give us, a big move to 5, 6, 7, and it all happens, during power hour. And I'm going to come back and be like, oh man, I missed it. And I'm going to have to control the FOMO on that because, I'm not really missing something if my rules dictate that I don't trade during that time of day. Anything that happens during that time of day, I have to just assume I would have lost on it. As beautiful as the chart looks, I just have to know that I would have lost. It's hindsight's always 20/20, and you're always, give yourself the benefit of the doubt that, oh, I would have traded that and I would have made a lot of money. But the reality is probably the opposite. You would have traded that and then you would have lost money, and then you would have felt really frustrated. So my game plan for the rest of this week is to continue focusing on A quality setups and to try to maintain the patience, to hold that discipline. And that's the hardest part because boredom could set in, or maybe kind of just feeling antsy, like, oh, I really want to get a nice green day. And then I start jumping in something that's not so great. And while it might work, it could also give me an unnecessary loss. And if I do that, my accuracy almost certainly is going to come down. So I've got to really be careful about over trading in general and trading low quality setups. All right. So anyways, that's it for me. I hope you guys enjoyed this recap for today. As always, I hope you hit the thumbs up. I hope you subscribe to the channel, and I'll put a link for a 2-week trial down in the description if you want to check that out. You could trade side by side with me for the next 2 weeks. And I'll remind you, as always, that trading is risky. My results aren't typical, so manage your risk and always practice as a simulator before you put real money on the line. I'll see you back at it first thing tomorrow morning.